If you're holding index funds for 20 years, you're always going to be up. No matter what happens, COVID happens, the '08 crash, the .com crash, like if you look back and zoom out, you'll always be up in the long term. So that's why it's the safest investment for a majority of people.
If you're watching this on YouTube, make sure you smash that like button and click subscribe. For those of you listening on a podcast platform, be sure to subscribe on whatever platform that is and leave us a rating if you can. The more likes, ratings, and subscriptions that we get, the more we can spread the message and grow our community. So we also have a free Facebook group. It's called the Average Joe Finances Network. Check us out, join the group, join the community, ask questions, and become a part of the team. All of our other social media accounts are listed in our flow page, and we have them in the video or podcast description below. Hey, how's it going, everybody? So today's guest is Sammy Warrayat, and he has been a leader at a Fortune 1000 company, a warehouse blue-collar stalker, a support analyst, and many other roles in between. Throughout all of it, Sammy has always been passionate about finding a way to be financially independent and do what he loves most: coaching personal finance and being a life coach in areas of success for millennials his own age. Sammy realized that money is important to unlock freedom of time, but it's not the only piece needed. That was a key motivator for him to dive in and see what else was needed to be truly successful in life, where he eventually came up with these 5 categories: happiness, money, physical and mental health, career and purpose, and relationships. And that's social, intimate, and family relationships. Today, Sammy's retired. You see that word again, retired from corporate America and hosting the Successful Millennials podcast. It's a podcast that's dedicated to informing, empowering, and inspiring millennials to get out into the world and live their most successful life. They cover all areas of the stuff you wish you learned in school, and they explore the steps to reaching success in 5 categories. Like we said before: money, happiness, health, relationships, and career. But hey, Sammy, absolute pleasure having you on. That's an awesome background. Thanks for joining us today.
I appreciate it, man. You hyped me up a lot. I hope I can live up to your expectations.
Yeah, I hope so too. No, I'm kidding. Hey, so speaking of that background, which amazing background, man, congratulations for all your success and everything that you're doing. I'd like to dive a little bit deeper into that, right? So I kind of gave like the wave top of who you are. So Sammy, if you could tell us a little bit more about yourself. What was the thing that drove you into this? Just share your story with us.
Yeah, I think it's because my parents were immigrants into the country, and they thought that the level of success or the goal of success would be get a high paying job, get a college degree, lawyer, engineer, doctor, something like that, and you'll be good. And I went to Georgia Tech. I got a computer science background. Didn't really know what I wanted to do, but I was young and I was just like, let me get something that I can transfer into any industry. In computer science, you can do analytics, you could do project management, you can do coding, you could do anything really. So I decided that would be the major for me. And I started bouncing around in corporate, but I didn't really know what I wanted still. So my only 2 criteria for finding a job was, what am I going to learn and what am I going to earn? And that's it. Like the company culture, the team dynamic, the title, none of that mattered to me. It was just those 2 things. And so I bounced around a little bit after I continued to try to master every role I was working as hard as I could and as many hours as I felt needed, like 70 hours every week, and try to master the role as fast as possible with trying to find out, okay, now I could build that kind of salary. Let's figure out what I'm going to do for the future. Cause I know this isn't a long-term, like I'll burn out by doing this forever. So I had to keep a forward eye on the future with saying, how am I going to free my time up? And so the last few years, I've been really trying a bunch of different side hustles, finding out where my passion could be, because I didn't just want to transfer from one job to another job. I wanted it to be something that was more passion driven and allow myself the time to really find it and master that role and continue to really learn it, because even in podcasting, as you know, like every episode you feel like is better than the last one because you've learned something new, either how to interview, how to edit, how to promote. So it's just a constant process of learning that I've just figured out. This is what I like doing. I love talking to people. I love helping people. And whether that be via podcast form, via the coaching that I do, or just getting on other people's shows, it's just how you want to spread the word and get people to have their finances in order. And then everything else will be following, in my opinion. And I think you would agree with me, is that if you can get your money in order first, it makes a lot of things easier. It's not going to guarantee you happiness. It's not going to make you without any problems in life, but you'll be able to handle a lot of stress better if you could just cut a check, Zelle somebody, or, pay cash to get rid of the problem.
Yeah, right on, man. That's all awesome stuff. And to add on to your background there, I was taking some notes as you were talking about the stuff there. So you went into your career field, right? You majored in computer science because of how diverse it can be in the corporate world. And the question you asked yourself when you got to your company is, what am I going to learn and what am I going to earn? I had to write that down. That is absolutely amazing. You probably saw, me on the camera here. As you said that, I just had this big smile on my face. Yeah. And I was on mute. You didn't hear me, but I said, oh, that's really good. And I wrote that down. That's a question that anybody should ask in any career field that they're going to go into. Because if you have that kind of mindset, right, the what am I going to learn and what am I going to earn? And I really like that you said, what am I going to learn first? Not what am I going to earn and what am I going to learn? You said, what am I going to learn and what am I going to earn? That's an ode to that education piece and why it's important to learn as you go. One of the other things you said too, being a fellow podcaster, you understand that you feel, oh, hey, this episode's better than the last one because I learned this, or because I talked to this guest and they said this. And you learn so much as you go through this process. So that's absolutely awesome. I had to point that out. The other thing I wrote down is you understood going into this career field that if you did this forever, you would totally get yourself burnt out. And this was not a long-term thing for you. But going into a decently paying job, right, where you can actually start building up some capital to start doing something else with that, you told yourself, okay, hey, what's next? So you started doing side hustles, right? Something that was more passion driven is what you said. And being able to do something that you're passionate about. And I say this on my show all the time too. If you're doing something that you really, really genuinely enjoy doing, can you even really consider that work? Because you sit here and it's something you're just enjoying. Like you're spending your time doing something that you enjoy and it's making you money. Like you can't beat that, right? Yep. Because we are always trading time for money. We trade time for money, and that's one of the biggest things. And if you're trading time and you're not enjoying what you're doing, but you're trading that time for money, man, that can really be a drag sometimes. So I really appreciate you pointing that out. Okay, so I have a question I want to ask you before I get into like some of the stuff, like the different categories that we were going to discuss today. So it's more about you personally, Sammy. So what is it that you are doing right now on your own journey to or in financial freedom?
I'm really trying to focus down on my trading strategy. So I know common knowledge, and the vast majority, 95, probably 97% of the people in the world should just stick to ETFs and index funds, and you're going to perform or outperform the market. And the people who take the risks generally fail. Like time in the market is better than timing the market. But there is people who have been able to do it, whether it be day trading or swing trading. And I've started to get into swing trading. I think it's more of my risk profile. I'm not comfortable throwing the amounts of money needed in a day trade or a weekly option to make the returns needed for it to be viable. So I've figured swing trading is a thing for me. I've dabbled in it. I've gotten pretty decent at it. I need to get a lot better. But that's the big one for me, because 50% of my portfolio, I would say, is long-term investing. And then 40% is swing trading with 10% cash on hand every time I need to, make a move or anything. But narrowing down that strategy, figuring out how to follow that strategy is a lot of discipline. And there's like a lot of emotions that go into markets and timing. And this past week has been terrible for a lot of people. So you just got to kind of weather those storms and figure out what your plan is and follow that. So figuring out how to continue to master that is really next on my journey.
Yeah, right on. For our listeners here, if you could, because you had brought up day trading and swing trading, can you explain the difference between somebody that's day trading versus somebody that's swing trading?
Sure. So day trading is normally defined as somebody who holds a position within a day, like they buy it and they sell the same position same day. And swing trading is normally like a week long, sometimes a month, 3 months, 6 months, but normally in that half a year timeline, they've entered and exited that position. I try to do that 2 weeks to 3 month timeline. So I'm more of a swing trader. It's just a lot of pressure to bank on everything hitting on the same day for me to be able to be a successful day trader.
And with that comes a lot of research and time into it. So if you're going to be doing the day trading, that you're sitting here staring at charts all day and watching the stock market. So you have to be fully dedicated and invested in it in that moment. Whereas with swing trading, it's more of a, hey, you can see where the trend is going and know like maybe it's time to get out, or hey, right now this is on sale, let me go get it. So that's for people that have day jobs or anything else like that, and you can't dedicate that time to be a full-time day trader, maybe swing trading is a better option for you if you research it enough and understand what you're doing. Me, myself, personally, I don't do swing trading or day trading. I feel like that is not my forte. I tend to stick with real estate, but that's just me. So that's why it's really awesome to have somebody on the show that is more into swing trading, but also has the same kind of goals that I have as well. So you're just using like a different vehicle and a different way to get there. It's one of the things that I talk about a lot too, that there's so many different ways to get yourself to financial independence. It doesn't have to be my way. It doesn't have to be Sammy's way. It could be your own way. You can come up with your own strategy that works for you. It could be a mix of everything. I still invest in the stock market. I'm more of a buy and hold kind of guy, because for me, that's what I know. And maybe one day, who knows, maybe when I retire from my day job, that I'll do some day trading or swing trading if I could dedicate the time to it. But yeah, I just think that's awesome, man, just to see where you're going with your journey. And that was one of the things I wanted to talk about today too. Speaking of investing and trading and all of that stuff, what is the difference between investing and trading?
I think it's that exact thing that you mentioned. When you're investing, you're buying and holding. You don't really care that this variant that just came out in COVID 6 months ago, by the time this episode gets released, probably, and it tanked the market 15%. As a person who buys and holds, that's fine. Every month you're going to dollar cost average, which means you're going to buy a certain amount of money, let's say $1,000 a month in a stock. And next month you're going to buy $1,000, and you don't care what the price is. Over time, it'll average out and you'll have a cost basis of X. Whereas when you're swing trading or you're just trading in general, your cost basis is really important. Your average price of each share, whether you dollar cost average in terms of mini bumps in and stepping out of a trade, or it's just, that 15% would probably stop you out. Most people have stop losses or limit orders as soon as there's an alert that hits. So those types of swings really matter, and you're really focused on the short term. And short term, like I said, could be up to 6 months, but it's definitely a shorter focus than 20 years, where in 20 years, unless you're holding like a specific individual stock, if you're holding index funds for 20 years, you're always going to be up. No matter what happens, COVID happens, the '08 crash, the .com crash, like if you look back and zoom out, you'll always be up in the long term. So that's why it's the safest investment for a majority of people that either don't have the time, don't have the emotional capability to do it, because it's not really, the charts are one thing, but when you have a strategy and then it goes down against you, how do you react to that is the more important characteristic of a good trader.
That's a key thing, is the reaction part, right? And you had mentioned like somebody who's trading, like they have their alerts set up and everything. I remember when I first started just getting into the market, I would set up alerts, and even being like a buy and hold guy. And then I would get these alerts and I'm like, I'd start questioning myself, like, oh, should I sell? Should I buy? And I was like, no, I don't have the time to focus on this. I got to get back to doing what I'm doing. So like for me, like it wasn't going to work for me. So I turned the alerts off. I can't do it. Okay. So before you got into the whole swing trading and got yourself to a point where you can get there, let's talk about how you got there, right? You had to get yourself to a point where you had the capital to invest, right? So do you have any budgeting tips for millennials? Because I know that's your focus. That's where your podcast is about, right? That's your focus group. So what would your budgeting tips for millennials be?
Yeah, it's like the bread and butter, I think, is the most important thing. You can learn how to make great returns as a trader or great returns as a side hustle or a business. But if you're spending a lot, then it doesn't really matter. If you have a lot of stupid consumer debt, then you're going to be forcing yourself to to make up a lot of money just doing that. So the first thing I did was I paid off my car, or I sold my car and I bought another car cash. And then I have two main tips that really helped me get there. Build up a sum or a sinking fund that you can do something like that for $10,000, $12,000, $15,000. You would want to do something like, I created a list of all the groceries I ever wanted to shop in that week. Every week, it's an Evernote or OneNote, whatever you want. And you just continuously track everything that you want to buy. And then when you go to the store, you only get that on the list. It sounds extremely simple, but the problem with it is you go when you're hungry, for example, or you go on a random day, or you go on Target when you forgot something on the list and you buy 5 other things. And these impulse decisions really drain you over a long period of time. And it's never the things that you really wanted. In my experience, coaching people, or even in my experience doing it myself, I've noticed that if you could just limit your impulse decisions, remove that buyer's remorse, and only focus on the things you really want to have, you're going to live a more happy life anyway, and it'll be cheaper. So the first thing is definitely create a list. And every week I only go shopping once, and I do all my errands that day. And I only buy stuff on the list. And that has helped remove like 70% of the impulse decisions that people make, which obviously really helps your budget. I'm not going to say don't get that Starbucks and save that $5 here and there. Yeah, those things are cool, but it's not going to break your bank as much as, well, let me just get this brand new shoes or brand new clothes. And that gets 100, and those stuff add up.
Yeah, absolutely. Don't mention, though, buying that extra Starbucks every now and then. You'll have Dave Ramsey looking out from the bushes looking for you. So I just think that was a funny trend that I saw on TikTok not too long ago. It was like the millennial thinking about going to get a cup of Starbucks, and then Dave Ramsey pops out. It's pretty funny. But anyway, no hating on him or anything, because he's helped a lot of people out. But I think that's awesome, man, because you said that you built a list in Evernote. I use Evernote too, because it's absolutely awesome. If I put it in on my phone, then it's also on my iPad. I can pull it up on my laptop. I do a lot of stuff with my podcast notes and stuff. If I'm at work and something comes up and there's a topic I want to put in, I'll log into Evernote and go put it in so I can go pull it up at home later. It's not something I have to email myself or anything. It's just one simple thing. Between that and Trello boards, it's absolutely amazing. So you built a list in Evernote, and what you did was, like, all the things that you knew you had to get, that's what you would put in there, and then you would just go get that. And I think one of the big things here is discipline. You said, hey, this is what I'm going for. This is what I'm going to get. And that's it. Now, even if I forget to put something on the list, I'm not going to go get it. And one of the things you said too, and it made me chuckle a bit, is don't go grocery shopping hungry. Just don't do it, because you're going to wind up buying all the crap you don't need. Trust me, that's why I don't go grocery shopping, because I'm always hungry. I always ask my wife to do that, because and when she asks me to go get something, she'll send me like a list, and she'll be like, oh, hey, can you pick up this and this? And I come back with 3 other things. She's like, what'd you do? So it's like the end of the world. But yeah, it's what happens, man. Awesome. So yeah, by doing that, by disciplining yourself, you're removing that impulse to buy things that you don't need. And like you said, like maybe a coffee here and there, that might not be a big deal. But the other things, like if you go to Target and then you go pick up a pair of sneakers or some type of electronics, something that you didn't need but you wanted, that's another key thing too, is identifying what's a need versus what's a want. So absolutely awesome. Going into this, right? So those are some things that worked for you. You sold your car, bought a car cash, so you removed that car payment. I think another thing that's really awesome about that too is you're able to lessen your insurance now, right? You don't need full coverage. You can now get just liability insurance.
I went from a nicer car, like a sports car, to like an Altima, which is regular gas instead of premium, and it's way better mileage. And to me, like, I was tired of a coupe because I couldn't fit anything. Like, I wanted to buy a TV, couldn't fit it in the Infinity that I had, because it was like a sports car. So like that one decision to me, where on the outside looking in, like, oh, well, you had a really nice car and now you just have an Altima, but it saved like about $750, $800 a month with the payment, the insurance, and the gas combined. Like $800 over 2-3 years. That's an extreme. That's 20 G's right there.
Absolutely. And isn't Infinity just like a hyped up Altima or a hyped up Nissan anyway? It's funny. I don't know if Altimas are the go-to thing, but I've had 2 Altimas that I've bought used in the past. Actually, my last car that I had, I have a Tesla now, but before that I had an Altima. When I first moved out here to Hawaii, I bought a used Altima after we bought our house out here because I didn't want to have car payments. And then my wife's car, that's been paid off for a couple of years now. So we haven't had that. So I do now have my first car payment for the first time in a long time. And that's with my Tesla. But before that, even before we moved here, when I lived in Virginia, I had an Altima and then I sold that and bought a F-150 cash. And then I sold that 2 years later for $2,000 more than I paid for it because used trucks went up in value. That was absolutely awesome. Best investment in a vehicle I've ever made. Yeah. Bought it for $7,000, sold it 2 years later for $9,000. Love it. And it was a 2005 too. And it had 62,000 miles on it. It was like barely used, which was awesome. And I like to kayak fish. So it was perfect. So I had my truck to put the kayak in. It was very tough doing it on the Altima. But anyway, and the only reason why I even took out a loan for the Tesla is because the interest rate is ridiculously low. I'm paying like 2%. It's almost like free money. Absolutely. So I just want to touch on that. So yeah, I do have a car payment. So don't yell at me. In our generation, because I'm also a millennial, right? So in our generation, we have this need for this instant gratification. And I know I have it too. Like for me, I understand, like I'm a spender. My wife's a saver. I'm a spender. So I've had to change my mindset on what I spend my money on. It's not so much I have to go get this because it's what I want. It's going to gratify me instantly, right? Now it's more, okay, I want to spend my money on an investment, or I want to buy an asset that will generate the cash flow to buy this thing. So I've changed my mindset on that. I'm still a spender though. So why is it important to, especially living in today's world, to have your finances in order with this instant gratification society that we live in today?
I think it's because there's so many things pulling at you. Like, not only is, if you're a conspiracy theorist or whatever, like NSA is always listening to you. You mention something, all of a sudden you're scrolling Instagram, that ad for that company is in your feed. Like, everybody is positioning to make you buy something. And if you let your impulses go, or you say, oh, I need that immediately, you're just going to be giving out money left and right. And it'll be like a death by 1,000 cuts. You'll never be able to get your head out of the bushes, and you'll live paycheck to paycheck for a long period of time. Like, even a lot of big myths is you have to be a high income earner for you not to be living like that. But even people who make 50 to 100,000 in the US still live paycheck to paycheck, 70% of them. So it's not like you can out earn that. And to credit Dave Ramsey, like, you can't out earn your stupidity. He's actually right there. If you're not intentional with where you're going with your money, then you'll fall into a lot of these impulses. So for me, it's like, figure out what you want to spend your money on. For me, like, I love traveling. You seem like you like to spend on a bunch of different things. That's just fine, as long as you know what they are and you spend on only them. Because I think the problem with budgeting, and the problem with what everybody has that bad kind of connotation of it, is they restrict only on the things they truly like. And then they go super harsh, and then they end up crashing and relapsing, similar to a diet. Okay, you like tacos, and that's the first thing you cut in a diet. It's not really going to work, because you need it to be like a long-term lifestyle that'll stay forever. And as corny as it sounds, it's really the only way to make a long-lasting change, and the only way the discipline will help you, because otherwise you're just relying on motivation and passion to carry you. So for me, like, I create a sinking fund so I can travel every month, or I go like for like 3 weeks every 2 months. So it depends on where my plan is, but I always make sure that I'm saving a certain amount of money so that I can travel. And when I go to any place and I see a potential target of somebody who, like, okay, I really want that right now, that instant gratification, that impulse hits me, I look back and I just take a one step back, and I just pause for like 5 seconds and be like, is this more important than me traveling to wherever my next place I want to go to is? And 9 times out of 10, that answer is always going to be no. I'd rather go to the place that I've been planning. So I say no to the instant gratification, that impulse that I need something right now, quote unquote. That's how I stop it. And you have to pause 5 seconds, because emotionally your mind processes it faster than you can. So you have to kind of pause, take a mini step back, and then ask yourself that question: is this more important than my number one priority? And if you've chosen the right number one priority, then most times that won't be the case.
I love that. And if you ask yourself that question and you realize it's going to set you back, then maybe it's something you shouldn't do. You have your goal with what you want to do. Hey, I want to travel. Let's say I want to go to Italy next month. But if I go get the new iPhone that came out, because of this down payment I have to put on it, I might not be able to afford to go to Italy with the budget that I have. So now you're putting yourself in a predicament where, oh, you can get that instant gratification, get that phone that you really wanted, or you can say, this other one will last a little bit longer and I could still go there and still do what it was that I wanted to do. There was another thing that you said too, I wrote this down because it's absolutely important that you are intentional with your money. Like you said, you have to be intentional with it. People are living paycheck to paycheck, and they live paycheck to paycheck because they're not intentional with their money. They're not thinking about it. They're just, okay, I'm going to pay my bills and then I'm going to go do this. I'm going to go do that. They're not budgeting. Like you said too, you have sinking funds. That's also something I do. I have sinking funds. I have, I think 7 to 9 or whatever, like different accounts right now that every time I get paid, my paycheck gets split into these different accounts. So what I do is I pay myself first. So I pay into my investment accounts first. Then after that, we put the money into the different sinking funds. We're diving into one of our sinking funds right now because it's the holidays. So we have a holiday and birthday fund. We know how much we're going to spend on everybody every year. So we put a specific set amount in there each month because we know how much we need to spend for the holidays, right? And for each birthday and things like that. We have pets, right? We have a dog and a cat. So we have a vet sinking fund or a pet one. And we call it the vet and pet fund. And that's how we buy the dog food, cat food, and all that other stuff. So I think stuff like that is super important. And then after we pay ourselves and pay our sinking funds, then we pay our bills with what's left over. And guess what? After we pay all of our bills, there's still money left over that goes into savings or it gets invested. Stuff like that is super important. And I just wanted to touch on that a little bit for my listeners here. If somebody's newer to the show that might not know what sinking funds is, that's generally what it is. You take your money and you put it into different accounts for specific reasons. Each account has its own specific goal.
It's perfect the way you do it as well. Like you do it for the long term. And so like there's a whole raise of Christmas shopping and Black Friday, holiday, Valentine's Day, everything is right in the 3 month schedule. But most people just get hit at that 3 months. But if you're developing a sinking fund, you're planning for that in January of the year before. And every month you put like, let's say $50, $100, whatever 1/12 of that number of your sinking fund is. And so it doesn't really hit you all at once. That's really what you want to do is kind of amateurize it, if you will. It's perfect. Think about yourself as a P&L for the nerds out there, I guess like myself.
Yeah. So I actually do it a little bit differently because that particular fund is also like for birthdays and stuff. And birthdays are all spread out throughout the year. So we add up what everything's going to be for an entire 1 year. And we say, okay, we know at this month, we need this much from this account. We need this much from this account, this much from this account. So we know monthly, we have a set amount that we put into the sinking funds, but how it gets split is different. So it's always going to be the same investment amount that goes into the funds, but we split it into each account each month based off of our chart when we know what's coming up and what's going where. But the beautiful part is that it's always the same amount that we're giving up from our paycheck. So we understand like where we're going with that. Now, I want to kind of circle this back to what we were talking about in the beginning, right? How you started off in computer science in the corporate world, and then you started a side hustle. And that's where you started collecting some more money to invest and do your swing trading and everything. So is it better for you, or has it worked out better for you to scale your side hustle or to move up in the corporate ladder?
I moved up in the corporate ladder faster. I think you can move up in the corporate ladder to a certain extent faster than you could probably do a side hustle. And it was also partly because, one, I didn't have enough money to feed a side hustle in the beginning. And I was investing for the long term, and you're doing your bills and stuff like that. And I just paying off debt. I didn't have any extra money to really start something new. So I had to move up in corporate. And I did. I over doubled my salary in like 4 or 5 years because I was just, like I said, learn, earn. And a year and a half, I was out every single time. And then I was like, okay, now I have enough capital. I've invested for the long term. I have no debt. I have lower expenses because of that. And I can afford to figure out what I want to do. So like you talked about real estate, I tried Airbnb. I tried renting a house and buying. It didn't work for me. Eventually, I'll go into multifamilies again and give it another try. But for me, I didn't get it. I didn't like it as much. So I tried to move to something else. And that's where I finally found swing trading and financial coaching. And obviously the podcast and then I was like, okay, let me figure out how to go all three and try to scale all of them. But then it was like too much. things juggling around. So then I was just like, okay, I have enough capital to take this risk. I have enough capital to know I can make a sustainable living in all three of those combined. So let me just retire from corporate, leave that main source of income, but then I can work on scaling it. Because I was at a position where I couldn't do both. I couldn't do all four really, but I moved up in corporate first to give myself the security, give myself the starting point, and give myself really the time to know what I wanted to do. Because I don't know if anybody knows what they want to do in their 20s. I certainly didn't graduate in college. I still sometimes don't know. Like I just keep trying new things. I'm like, okay, this is what I'm going to do for the next few years. And if it works, and if it doesn't, okay, let me try something else.
Yeah, but you got yourself to the point where you've lowered your expenses so much and you have such a good nest egg built up that you can afford to take those kind of risks. And I think one of the key things too, like to scaling, you had mentioned too, like you didn't have the money to put into your side hustle. And a lot of people don't understand, like sometimes when you build a side hustle, you start your own business, you're going to be putting money into it. Even for me, I came up with, hey, I need to step back and give up some of the control to someone else. And that's when I started outsourcing a few things and I was actually able to scale. I actually hired the podcast editing team before my podcast was making money, just because I felt like, hey, it's the time. I've got extra cash that I could put into it that I think at least to get my time back and spend a little more time with my family. And instead of spending 4 hours a day editing after I'd been at work all day, I think that was super important and it was very helpful. To scale, sometimes you got to spend a little bit of money. And I think that's really important that people understand that. And you got yourself to a point where you were able to do that and still be able to walk away, which is absolutely amazing. Speaking of your side hustle, you do the swing trading. You also have a podcast. Now, when you're swing trading, all of it is based on the market. So if somebody's getting into this and they say, oh, well, I want to beat the market. So, well, can you even beat the market? And should you even try to do that?
You can, or people have, I'll say it that way. There's been people who have beaten the market, but even like regular retail traders, retail being people who are like me and you, not people who work in Wall Street as institutional brokerage firms. But the person I would say that is most capable of doing is somebody who is always going to continue to learn and very humble, because the market will humble you when you think you've made the right choice and everything is correct on paper. And then some news comes out that you didn't expect. And news has a very volatile impact in the short term. On the long term, it goes away. But in the short term, it'll mess you up. And then people start panicking again, those emotions. So I would recommend reading a lot of books of famous traders that have done it. One of my favorites is New Trading for a Living by Dr. Elder, which really focuses a lot on the trading psychology and investor psychology of mass markets, of people, and how you can get better at that. And there's obviously technical indicators, and which is like the charts and the patterns. And then there's fundamentals, which is how to assess a company. But those are easy to learn because it's just like you can Google it and stuff like that and figure it out, research it. But how you respond to something is the biggest part that I think a lot of people miss. And if you don't have that piece, then the rest doesn't really matter, in my opinion. So it's hard to really say if everybody should do it, because a lot of people try and a lot of people don't make it very well. So I would focus on that and focus with small positions is the most important thing. Worry about the percent return, not the money you got back. Because, okay, you get 10% return is good on a swing trade in a month. But if you put $1,000, everyone's like, oh, I did all that work for $100. That's not what you're trying to do. Right? You're trying to focus on, can you get that 10% return consistently, so that when eventually you're playing with a 10, 15, 20, 30, $100,000 position, now 10% of 100 grand is 10K in a month. That's not bad off one trade. So that's just how you have to start with the small baby positions, $100 positions, build it up to 1,000, 5, 10, and then go from there. But if you can't handle a small position emotionally, then you're not really going to have a good time handling large ones.
Now, you had mentioned like that there's certain things that traders are looking at and like different indicators and measurements. So what is it that you're looking at when you're making these decisions on whether or not you're going to buy or sell?
Oh man, I love this question. The MACD is one of my favorite indicators. It's called the convergence divergence. or moving average, convergence, divergence. And essentially when it comes up and it crosses, that's a good buy signal. But the key with all the indicators is you want 2 or 3 confirmations on 2 or 3 different timelines. So as a swing trader, I look at the day chart is my favorite chart. Like I don't really look at the 1 minute, 2 minute charts, but the day chart. And when I want to zoom out, I want to look at the week and the month. So I'm looking for confirmation at the month first, then the week. If both of those are a good trend uphill, then I'm like, okay, this is a good time, or they're both confirming back. Then I'm looking at the day and seeing where the trend gets. So from an indicator perspective, there's something called a relative strength index as well, that if it's under 30, it's considered oversold and it's a good buy. And then overbought at like 80, meaning too many people are holding on to it, it's probably a good sell signal. That's just a quick check mark. MACD is a good one for me as in terms of indicators. And then there's a bunch of different chart patterns. I try to draw a triangle. So like if it's descending downwards, then when it hits the point or right when it breaks out of either end of the triangle, whichever direction it breaks, if it holds for a day or two, then I'm going in. Or I buy a little bit when it first breaks. I buy a little bit after the second day. And then if it's still holding, then I'm going with the rest of my position. And then exit signals are, there's Fibonacci sequence. There's a bunch of different ones, or when a trend starts reversing is a good one as well. So like if you start losing momentum, not a lot of volume, then I'm like, okay, this run is probably over.
That's definitely a great way to better understand it. And I know there's so much more that goes into that. So for the people that are listening, this is like a wave top of what he's doing when he's looking at making these trades. And it's still like a different language to me. So I'm sitting here writing all these notes. Absolutely awesome. Like I'm actually looking forward to when I transcribe this episode, just go back and like really read a lot of the stuff that you're talking about, because this is absolutely awesome, man. Especially the mention of that book. I'm going to check it out.
And there's also two great YouTube people, Swedish Investor and Financial Wisdom. The 2 different YouTube channels, they do the same thing. It's like an animated graphic of
I've watched
summaries.
Both of those channels before. Yeah, as a matter of fact, it's almost like cliff notes of books. I've actually, it's funny because there was a couple books that I read and then I went and watched that to just compare, like, okay, what did I get out of the book versus what they're saying? And holy crap, if it's not really close. It's almost like there's this app or website now called Blinkist, and there's a couple other ones too where, or 12-minute reads and things like that, where they'll just take a whole book and within 12 to 15 minutes explain what the entire premise of that book is to you. And what I found is like this YouTube channel does the same thing, but they do it in 10 minutes. So why do 7-minute abs when you can get 6-minute abs?
There you go.
Awesome. You just had to throw a movie reference in there, but okay, cool. So now I went backwards in the order of the categories that you wanted to discuss with me today. And I did it on purpose, right? Because I think all this culminates into what you put together as what you call the 5 categories of success. And that was actually the first thing that we had on the topics for discussion. I actually want it to be the last thing because I feel like all of this culminates into that. So now, if you could you explain what are these 5 categories of success?
Yeah, and I love the way you did that as well, because they're all super intertwined and they all have the end goal. And to me, the end goal is the happiness success metric. I think nobody would really be opposed to having a happy life and a successful life. And the way they determine it is a lot of people define it in different things. And to me, I've heard a lot of different definitions. But if for the money category, if you're financially independent, you're able to do what you want. You don't have to necessarily retire if you don't want to. If you love your job, that's awesome. But being able to do what you want when you want is the financial piece of that, the money piece of that. The mental health, somebody who is not really, who knows their emotions, who knows how to handle their emotions, who knows how to build relationships through not being jealous, not being angry all the time, not being passive aggressive, all these negative types of people who aren't really healthy mentally, or they just have mental wellness issues like anxiety, depression, etc. That's really big in today's world, partially because of social media. I think probably a lot of it due to social media, but it's just the fact that there's so much comparison going on and people don't feel like they're enough. So mental health has been really huge, I think, and rightfully so. It wasn't really like that, I guess, 10, 20 years ago. Physical health has always been important. It's been really important to me. And I think your body is the most important thing. You have to be able to be in control of your body. You have to be able to feel good, feel healthy, look good, feel good type of mentality. So pairing a good physical frame with a healthy mind really helps you be able to do things that you want to do. And you're not out of energy. You don't lack the vitality. You don't wake up groggy in the morning, stuff like that. And career/purpose, if you had all the money in the world and you were healthy, but then you still see people not really living life. So I think it's because they're living an empty life. You see a lot of people with the golden handcuffs even, which is they have a high earning corporate career and they have enough money to do their family vacations every year. And they have everything they really want, but they live in a shell of themselves. I feel like it's the best way to describe it. They don't really have that energy of working in your passion. You mentioned earlier, if you're working in something you love doing and you're getting paid doing it, is it really even work? Like, it's not. It's awesome. So having that purposeful career is a very big, I think, success metric to achieve in order to have happiness. But even if you have all those three things and you're doing it alone, it's lonely, right? It's boring. You can't have the quality relationships. What's it all for if you're not sharing it with somebody or passing it on to somebody? It could be an empty world if you don't have any good quality relationships. And relationship category is all about the quality of it. To me, I don't really care about how many friends I have. I care about the ones I can count on the most. And that goes with friends. It goes with family. It goes with, significant other when you're in a relationship. And to me, those all four kind of tie into the happiness. It's hard to me to be happy overall. And you're not going to be happy 100% of the time, even if you have all four of these things mastered. To be happy a majority of the time, it's really hard to do that without being successful in any of the other four. So I kind of have happiness at the end there because it's all streams of an ocean going together.
Yeah, absolutely. Love that, man. Love this entire conversation. I feel like the two of us could chop it up for hours, man. But unfortunately, we can't because nobody's going to listen to a show that's 10 hours long. So I'm sure we could talk for at least 10 hours until I run out of breath here. But absolutely awesome. And now you had mentioned a book earlier, but I also want to ask you too, if you have a favorite business, investing, or real estate related book or podcast besides your own.
Favorite book? I think it's always been in the top three, but I think right now it's my favorite book is Psycho-Cybernetics. It's an old book by Dr. Maxwell Maltz. Has nothing to do with business or stocks or real estate, but it has a lot to do with how to understand your mind, how to understand your conditions and your subconscious and how to alter it. And so you're not living on autopilot, which I think if you're able to master that, then you're able to do whatever you really want in business. Because you're not always fighting against yourself, not always fighting against your preconceived notions and stuff like that. And it helps with people who are fighting self-confidence issues and self-worth issues. So Psycho-Cybernetics is a great book. It's like a book in the 50s, but it still is awesome to me. Yeah. And then podcasts, there's a lot of good ones. I've actually been recently on, what is it called? The Learning Leader Show with Ryan Hawk. Okay. I think he has some really interesting people about business, about management, about leadership. And he has some great guys as well, like Patrick Lencioni is a common guest on that show, who's one of my favorite authors as well. So he's just got a really good corporate. He has a sales background, so he talks a little bit about his sales background. He's the brother of AJ Hawk of Packers legend, if those of you guys who watch football. So he came on the show a couple of times as well, and it's got a lot of different perspectives. He's a great interviewer as well. His conversations are always good on that show.
Awesome, Sammy. Great recommendations. Really appreciate that. So now, Sammy has his own podcast, right? The Successful Millennials podcast. I'm going to ask you the most important question of this entire interview, right? Because we're sitting here having this awesome conversation, and our listeners right now are thinking, man, I really like what Sammy's putting out. This is some really good stuff. Tired of hearing Mike. I want to know more about what Sam's doing. Where can people find more information about you? Do you have a website, social media you could share with us? I know we could find the Successful Millennials podcast everywhere that podcasts are out, but where else can we find you?
Yeah, like I said, all the streaming platforms, they have it there, but Instagram and email are probably the best way. So FinanceZilla is my Instagram handle, as well as the company. So you could find the website is financezilla.net as well, but Instagram's probably the best way. A lot of people my age are probably on Instagram as well. And then email is financezilla@gmail. So it's pretty much FinanceZilla across all the boards.
Right on, man. We'll make sure we have the links and your contact information in the show notes to make it easy for everybody. Sammy, dude, this has been an absolute pleasure. Like I said, I could chop it up with you all day, man. So definitely want to stay in touch when this is over for sure. But this has been a phenomenal interview, and the information that you're putting out, and your 5 categories of success. This is just really good stuff. And it ties a lot into what we talk about here at Average Joe Finances. And you get it with the common people struggle. You know what I'm saying? So it's really awesome to get another perspective like yours on the show, and somebody who has a similar perspective to mine, but is doing it a little bit different in the swing trading. And I just think it's really awesome to get this perspective. So again, Sammy, thank you so much for taking some time on a Saturday to join me on the show today.
Mike, this was my honor. I was really looking forward to this episode for a while because, like you said, I feel like we could talk for a while. Both have similar interests, and I really enjoyed this conversation, and definitely keep in touch.
Yeah, absolutely, man. Aloha from Hawaii. Thank you for making it to the end of this episode. Greatly appreciate you being here with me today on the Average Joe Finances podcast. If you haven't done so yet, make this the episode that you go leave us a 5-star rating or subscribe to our YouTube channel. The Average Joe Finances podcast is for informational and entertainment purposes only. Have an outstanding day.